What is going on, investors? Hopefully you guys are having a wonderful day out there. It is time to continue our series where we're analyzing stocks that have fallen tremendously over the last few weeks, and in this case, over the last year. On today's show, we'll be looking at Alibaba Group, ticker symbol BABA. We'll talk about, is this stock a buy? This stock year to date, just year to date, is down 40%. And I know here on the channel and across YouTube, especially in thumbnails and titles, we probably overuse the word crash when referring to either a stock market or a particular stock in this case. Well, we're not overdoing that here. This stock is down over the last year 51%. I would absolutely categorize that as a stock crash when we're referring to Alibaba. So you might be wondering, is this a time to buy? Because here's the deal, is this stock decline largely has nothing to do with Alibaba, the company, Alibaba's products, Alibaba's sales, Alibaba's future potential. No, it has everything to do with government regulations and the China government cracking down on companies like Alibaba. So we've got a lot to unpack here. On today's show, look, I could have picked like 30 press releases over the last few months when it relates to Alibaba. I had to narrow it down a little bit. And so we'll talk about that. And we'll talk about, is there potential for all clear signs? We're almost like looking for signs like, hey, can we buy this stock? Because when we get over to the stock chart on Alibaba, it looks like a ski slope heading downward in the steepest direction you possibly can. I have not seen too many mega cap stocks in my lifetime that has this type of action where you go from well over $320 per share to south of $140 per share in the span of just 6 to 12 months. It's been absolutely astonishing. Now, are we reaching areas where we could potentially buy Alibaba stock? Talk about that on today's show. Now, here's the deal, is a lot of us sitting here in the United States are used to the United States government. In fact, we're used to our former president, Donald Trump. He would get out on Twitter and he would say some things. He would say a lot of different things. And some of it was definitely very flippant, or for a lack of a better term, not necessarily well thought through. And sometimes he would be directly pointing at companies like Ford, companies like Boeing, Lockheed Martin, Facebook, Google, Twitter. He would specifically call out companies by name. And rarely was there that big of a reaction in those stocks, because here in the United States, the president of the United States can say one thing, having that lead to laws and regulation and things that directly impact those companies actually takes a long time and takes more coordination than strictly just the president of the United States. Now, in China, absolutely completely different thing. If the president and the government of China wants one thing, they're going to get it. And we are seeing evidence of that here in China. So they just released, this was back in August, a new 5-year plan, a 5-year plan, not 5 month, 5-year plan that aims at more regulation of tech companies. That's not good because we are barely in year 1 of this crackdown. Now, according to the document released by Chinese President Xi Jinping, he said that this is the Chinese government, quote, actively promote legislation in important areas such as national security, technological innovation, and public health. Well, look, you can put that on a loop here in the United States. That's what every politician says. Put it up in Canada, Australia, the UK, anywhere. Every politician's going to say that. But actually, it was the next sentence that says that they are going to focus on, quote, anti-monopoly and foreign-related rule of law. That absolutely has put companies like Alibaba in the crosshairs, and Alibaba's shares have reacted extraordinarily negative since these news started to break. Now, like I said, I could have picked dozens of press releases, so I tried to narrow it down to what I think are the most important ones. So Beijing, which is China, is looking to break up Ant Group's Alipay. So Alipay, which is a subsidiary of Alibaba and founder Jack Ma's company that functions as a payment service and a bank in China, well, it was set to go IPO here in the United States and was scheduled to be one of the largest IPOs of all time, if not the largest. And that got smacked down by the Chinese government. And now they're looking to break up that company. That is a problem. Now, Alibaba adds Tencent's WeChat Pay and options to some of its apps. Now, you might might say, what does this headline have to do with? So like I said, here in the United States, the president, politicians can say things, doesn't always lead to much of anything. In fact, the majority of the time, it's just one ear out the other whether it comes to voters or companies out there. In China, completely different. We are already seeing Alibaba take actions to help appease the Chinese government. Alibaba adds Tencent's WeChat Pay to its apps. That is in direct request by the Chinese government that these companies stop blocking each other's payments accounts, stop blocking the links. So on Alibaba, if you tried to post a link to Tencent, which is a close competitor to Alibaba, well, that link would be blocked. It would be censored. And so the Chinese government wants that to open up to start sharing payment options across platform. Similar to what you see here in the United States, although some would argue that maybe Apple has some monopoly on that. Now, Alibaba announces a crypto ban on its platform. So the Chinese government said, we're cracking down on crypto, not only the crypto itself, but crypto mining. And Alibaba saying, well, we better start listening and start appeasing and making the Chinese government happy. So they immediately said, we are banning crypto mining. We are banning certain cryptocurrencies that were traded. Alibaba is disposing of their state-run TV stake under China pressure. So China didn't like that Alibaba owned just a very small piece of a major TV network there in China. They are selling that stake off. Alibaba pledges $15.5 billion to China's Common Prosperity Drive. So this is, think of it maybe, and this might not be an accurate way to describe it, but think of it as a social program by the Chinese government. Well, Alibaba is donating $15.5 billion. Okay, that's not 15 million. That's $15.5 billion. That's a lot of money, even to very, very rich and gigantic companies. This is going to be over a 5-year period, but that's basically over $3 billion a year. Alibaba is going to funnel to this prosperity program again to be in the good graces of the governments. Now, the Ant IPO, which we talked about in the beginning, which is a payment arm of Alibaba and owned or partly owned and founded by Alibaba's founder, Jack Ma. This analyst is saying that the Ant IPO, which they are anticipating to eventually happen here in the United States, even though there's rumors that the Ant IPO is off the table and that company is going to be broken up. If it's not broken up, there'll be an IPO here in the United States, and analysts are saying that could be an all-clear sign for China stocks because it could signal that Beijing's done what it's wanted to do. It's got its money. It's got its control over the companies. It got it to share information and share payment processing the way it wanted to, and it's saying, hey, we're going to back off now. That could signal the all-clear sign, but we're not anticipating that IPO until next year at the earliest. So you better believe when a stock is down 40% year to date and 50% over the last year, the valuation is pulled back to levels you have not seen before with Alibaba. Here's a 5-year chart of Alibaba's price to sales on a trailing 12-month basis, and we're sitting at 3 times sales. Over the last few years, this has been as high as 17 times sales. So over 5 times higher than the current rate. You better believe the valuation on Alibaba is really, really pulling back. In fact, at the current moment, we're sitting right around a 15 forward PE on this one. That is factoring year-in-year growth in the most fiscal quarter at about -7%. So we are seeing a slight slowdown in the revenue growth over at Alibaba, but analysts are projecting that you will see this revenue growth, in fact, earnings growth, grow over the next few years. And in fact, if it just grows modestly in the mid-teens to low 20%, in a few years, in 2025, this company will be trading at a 9 times forward PE, which you don't see on a lot of companies. You might see it like on an IBM, maybe an Intel, maybe like legacy tech, like Left 4 Dead tech here in the United States. But look at what NVIDIA's forward PE is, certainly Amazon, even something like an Apple and those types of companies. Well, they're much, much higher than Alibaba. So this one certainly has pulled back into an area that we can make a lot of sense for. And now what I wanted to show you before we get into the stock chart of Alibaba is the price to earnings. And this is for trailing 12 months on Alibaba is certainly sitting very low. In fact, it's sitting about 16 times. It has not been that low. In fact, it hasn't been under 20 virtually in the last 4 or 5 years. This stock is at levels that we just have never seen it. But then again, we've also never seen this type of action in China on companies of this size, at least in the modern stock market era where these companies are trading here in the United States and abroad. Now, moving probably to the most important part is from a technical perspective. Now, I put this on a weekly chart because when a stock moves this much, you can't get it all on a daily view. But I put this on a weekly chart. So each one of these candlesticks is actually a week of time, and you see these big old red candles that it's printed on this downtrend. Now, the first thing that should stand out to you when you look at a chart like this is we are in an absolutely well-defined downtrend, and it is absolutely not formed any type of bottom. It hasn't even come close to forming any type of bottom during this downtrend. And so what we're looking for is areas where this thing could logically bounce, and it is right here. Again, I am on a weekly chart, and where I'm circling the cursor right now is back in 2018 and 2019, basically the end of 2018. We're talking like 3 years ago. And 2019 is back here at the $130 level. Alibaba traded down to about $130 per share and never looked back. In fact, it rallied hard up to over $190 per share before trading back and then starting its initial leg up all the way up to $300 per share late last year. Now, obviously, we have fallen tremendously since then, but I think you could start to make an argument, at least from a technical perspective. We're sitting here at $143 per share on Alibaba stock. I have the 3-year low sitting at $130 per share. So from a technical perspective, this is a spot where buyers will likely step in for Alibaba because they've stepped in there in the past. Now, things are completely different. If you happen to break this 130 level, well, I tell you what, that downtrend's intact, and who knows where it goes to. So if you are long Alibaba or you step in here at 130, you better hope the buyers step in. And will they step in? We'll find out likely here in the coming weeks ahead. Now, the other thing that you're looking for is at some point this stock to flatten out. This downtrend, again, I'm looking for all clear signals. I would not, and I repeat, I would not buy any stock on this steep of a downtrend. Okay, it is showing no signs of reversing. It is showing no signs of bottom. It is not technically at an area of demand, although it's very, very close. I mean, we're talking within $4 or $5 per share on this one. But we're basically gambling. We're guessing. We're flipping coins at this point on whether or not Alibaba has bottomed at this point. So what we're looking for is areas where Alibaba starts to trade sideways. That would be very, very bullish in my opinion on this stock, is if we can start trading sideways. We can find some footing here at 130 and start chopping around sideways. Because believe me, there are plenty of United States investors that are hands off, hands clean, never going to invest in China stocks again, because many people got burned on this stock. They figured, hey, if I'm going to invest in China, I'll invest in the biggest company. They certainly will hold up better than the more speculative ones. And we've seen that theory has been flown by the wayside, given the government is willing to go after these companies as aggressively as anything that we've seen here in the United States stock market. So I would not get into this stock until we see a clear sign of a reversal. We either see this stock start flattening out or breaking the previous lows, whereas at this point, you'd have to get above 160 on this one to really take out these previous lows here. Otherwise, you're just making lower low, lower low, lower low, and you're going to continue to go down. Now, I will very closely monitor this 130 area. If buyers do not step in at this 130 level, well, I tell you what, this stock is in free fall mode, and it is likely to continue to drive lower. If we find some footing here at 130, we do do a reversal pattern, create a higher low, or we bottom out here and chop sideways for 4 or 5 weeks, I tell you what, that could be the signal that it's time to go on an Alibaba. I don't anticipate this stock forming a V recovery. I could be wrong, because you notice on this stock chart, there are lots of V recoveries where the stock just traded down, and then 2 weeks later, it was in an uptrend. Okay, again, remember, we're on a weekly chart, not a daily chart. Each one of these candles represents a week of trading. And you do notice periods where this stock doesn't really trade sideways very much. It makes a bottom and then bounces back, and it typically bounces back hard. So I'd be monitoring that. I wouldn't be trying to get this one at the bottom. That is probably the last point I'll leave you with. When stocks are on this deep of a downtrend, don't try to pick the bottom. Pick it as it's bouncing back up. Pick that momentum on the way up. You can see on this stock chart, when this stock makes a reversal, you don't have to get it at the bottom, okay? Because when you reverse on a stock that's been down and oversold this much, well, I tell you what, it probably has a long ways to run. The initial areas of resistance that we'll see on this one is probably 160, 170. That's a good 20, nearly $30 higher than where the stock is today. You don't have to get a stock like that on the way down on the perfect spot on bottom. In fact, that's impossible, in my opinion, to try to time if you're an investor, and you shouldn't really waste your time doing that. You should look for signs of bottoming, which is a flattening out or consolidation, or creating higher lows and wiping those out, in my opinion, closer to the 160 mark on this one. But Alibaba's approaching a critical level. There is lots more to come from the Chinese government. And I think I would lean more to where these analysts signal all clear. Well, if you miss some upside, absolutely. If you wait till the IPO happens, you will have missed some upside, but that will layer in some layers of protection and some safety, and potentially some signs that the Chinese government's heavy hand might get a little lighter going forward. And that's particularly what you want when it comes to Alibaba, and quite frankly, all these Chinese stocks that are trading here in the United States. That ends this video. We'll be back again soon with more. Good luck with your investments.